Most traders struggle with this one thing every single day, which is figuring out the right market direction. They're constantly guessing whether to go long or short, and that's where most mistakes happen. In this video, I'm going to show you how to use volume profile to find a clear daily bias using value shifts, types of volume profile shapes, and observing the New York Open session, so you know exactly what side of the market to be on. So let's dive right in. First thing I look at when I analyze the charts is I look at the value shifts to find the clear direction of where the market is going. You only need to be looking at the RTH volume profile session, which is what I have marked up right now. So you can clearly see this volume area was right here. The next day it was higher, which means that the next day we could be more bullish than bearish. Now obviously this value shift alone is not enough to have a clear trading plan and a direction of the market, but it gives an overall idea. The next day you can see how value shifted lower than the previous day, which means the next day could potentially be more bearish. And as you can see, New York opened way lower, and again this value area was lower than this one. Then we go even further, and the next day is even lower again than this one. So you can see how the value is shifting from upwards to more downwards, which can already give you an overall idea on how to treat the session for the next day. The second thing I look at on a daily basis is the volume profile shapes. There are three shapes in the volume profile that are most common. We have a P shape, then we have a B shape, and we have more of a D shape. A P shape just means that there has been more volume and more pressure to the upside, showing buyers were more in control. A B shape is the opposite. Pressure and volume was more to the downside, sellers were more in control. And a D-shaped volume profile is more of a balanced market where buyers and sellers were usually on an equal level of contract sizes. Keeping these two things in mind, value shifts and volume profile shapes, you can already have a pretty good idea of where the market might be headed for the next session. But we cannot ignore point number 3, which is the most important one, which is where does a New York session open? This idea will give us a clear trading plan and a pre-market plan on knowing how to treat these volume profile levels accordingly. We already have some trade examples right here. You can see how the value has shifted upwards in this session. So first of all, we already know that the value shift is more bullish. This volume profile shape is more of a B shape, which means pressure is to the downside. So this gives a little bit of mixed signals. But I would say that the value shift is still more important than the volume profile shape. But now looking at the New York Open, we can clearly see that the overnight session was hanging around usually below the value area low, but then in the last hour of the overnight session, price rallied up, went above the value area, and New York opened way above this value area high. So we already have two bullish signs. Value has shifted up, New York is opening above the value area high. So we have two confirmations that price might be bullish, and it might be a good idea to look for longs. Now where can we look for longs? We just wait for this value area high to get retested after this break in the overnight session, and then we use order flow to try and find long opportunities. Now let's look at the next trading session. We know that value has shifted upwards on this day from the previous day, which is a bullish sign. This volume profile shape is more to the balance side. It's not a clear B or P shape. It's more of a sort of a D shape, also not the cleanest one, but it is more balanced. Again, looking at point number 3, where does the New York open? You can see the overnight session went way above the value area high. And then again, in the last hour or two of the overnight session, price had a massive drop and New York opened way below the value area low. Now, all we need to do is mark out the value area low and just wait for price to retrace into that level and wait for a retest to continue the move to the downside. And as you can see, price came right into this value area low, rejected, you wait for order flow confirmation, and you can try and short. And this trade would have played out beautifully, same as the previous day's buys. On the next trading session, we know that the value has shifted lower on this day from the previous day, which is a bearish sign. The volume profile shape is a little bit of a P shape, which is a bullish sign. So we're not really sure yet as we are having mixed signals. But where is New York opening? New York is opening way below the value area low. So we already have two bearish signs. But in this case, price is very far away from the value area low area to try and find a sell opportunity. So for that, you can use the overnight session volume profile to maybe have other levels that you can trade off, which I covered in a previous video. And if you don't get any trades on this session, that's also fine. You will have no trading days and you just need to accept that. You need to understand what are the strongest levels in the market, where do I have the highest probability of having a winning trade, and you just need to have the patience to wait for that setup. And this session also turned out to be a very choppy and rangy session. Now if we go to the next day, we know that the value has shifted lower from the previous day. The volume profile shape looks a little bit like a B shape, not the cleanest one. So we already have two sort of bearish signs. But then where does New York open? New York opens inside right here of this value area range. So this is not a bearish sign. So the first trade idea would be to long at the value area low and sell at the value area high. And we actually had a nice rejection from this value area high right before the New York market opened. And this brings us to point number 4, acceptance versus rejection. Is price rejecting the value area low, or is it accepting prices lower? In this case, there was a very strong sell-off, and for that we use order flow to see if there are potential entries or if it's better to sit out and wait for this level to break or to hold. In this case, sellers were way stronger than buyers and accepted prices lower. So all we need to do is wait for price to retrace into our value area low level, wait for order flow confirmation, and then try and short the market. Keeping these 4 points in mind every single day, most often than not, you will be on the right side of the market and will have high probability trade setups. If you want to learn my full volume profile and order flow strategy that I use on a day-to-day basis on NQ and how I find high probability trades every single day, check the link in the description for one-on-one coaching. So anyways guys, hope this video was helpful to you all. If you liked it, please leave a thumbs up, subscribe to the channel for more videos. If you have any questions, let me know in the comments down below, and I will see you in the next video.